Welcome to TheoTrade. This is Don Kaufman. June 1st, 2022. There's 11 minutes left inside of the trading day. The S&P's down just 10 handles. We traded all the way down here to 40.70 and change, rallied back up. And the only way to really describe the S&P futures in today's trading session is just downright sketchy. There is low liquidity on the bid and offer once again, and the S&Ps, they're just trading scattered. It feels broken, disconnected. I mean, I'm going to talk about some specific levels here momentarily, but what we're going to do in this evening's video, I'm going to talk a little bit about what I would term trading the inversion of the yield curve. I think that there's actually some spectacular opportunities presently in the yield curve. I'm actually going to show you those here momentarily. And I'm actually going to show you the easiest entrance to have the capacity to trade the inversion, or what I'm looking for as an inversion of the yield curve. Before I get there, let's briefly talk about the S&P's overall market. So as I said, the S&P's, they're down 10. Down 10 these days means massively unchanged. I mean, it's an absolute nothing move. But if you're watching the S&P's, as I said, they're scattered, they're broken, they're disconnected. And I just can't stress this enough. And I was doing this, a few weeks back. If you take a look at the bids and offers here, I mean, there's nothing to tell you other than there's just no liquidity. There's no liquidity behind this. And when I start talking about like no liquidity, what I'm referencing here is the bid size and offer size. Like people, that's not just thin. It's like non-existent. Oh, I saw a 2 lot on there a second ago, or a 3 lot. It's insanely thin. And the thinner it gets on the bids and offers here, which is market making firms are stepping back, some edgy volatility, we jump in price. We're not trading linear. And again, it feels sketchy. It feels disconnected. It feels broken. The only thing I can give you right now is, when you start looking at like a 30-day, 1 hour, low side, high side, specific levels. I mean, I am still of the strong belief that we have to kind of check the box and hit all the way up to the 42.11 before I would actually step in and be like, all right, this rally is over. I mean, maybe the rally is over, right? And when I say maybe the rally is over, again, we had an absolutely rip-roaring rally last week. We're 2 deviations out. We back off a little bit here on Tuesday. Here we are on Wednesday, a little bit more sell-side activity. Nevertheless, we didn't actually check the box and hit the 42.11. I mean, I think right now, and again, this is just my opinion here, that we're kind of trapped in a little bit of a volatility range, being 42.11, and down here, okay, is that 39, kind of 31. And we're probably just going to channel back and forth. We get above 42.11, there's something to talk about. You get above 42.11, you got legs to the marketplace. But right now, I think you just have to assume that this is bear market rally. And that's it. I mean, that's the only assumption to make. I mean, you take a look. And I talk about sketchy trade. I mean, the dollar is starting to rally again. That doesn't make me feel warm and fuzzy. Okay, what else do you have going on? Bonds, precipitous sell-side activity inside of the bond market, which is exactly what we're going to look at here momentarily. Look down the list of the usual suspects. Probably one of the most sketchy things on the screen, the fact that Skew is incredibly low. All right, what that basically accounts for is like, all right, there's just nobody really hedging out there. So there's not a lot of put activity. If you look at the VVIX speaks volume. Take a look at this. The VVIX, I'm going to open up basically the entire VVIX. You realize we're at the lowest point. This is the volatility index, and it just continues to go down, right? There's nobody rushing to buy calls in VIX. You go, oh, what's wrong with that, man? If you're not rushing to buy calls in VIX, what do you really got? Absolutely nothing. There's no hedging activity going on. So Skew points to no hedging activity. All right. The lack of activity inside of VVIX tells you, I mean, again, this is the lowest volatility that we've seen in VIX in what? You got to come all the way back. It's just chaos. And you got to come all the way back here to early 2020 to actually see VVIX this low. You start talking about Skew. And again, it's worth, compare, contrast. Skew. When was the last time Skew was this low? Let's get crazy. I mean, you got to go all the way back into, again, maybe like September of 2020 to see Skew inherently this low. These are not comforting things, because if we go back down, okay, it's going to be fast, it's going to be furious, and it's going to be violent, because trade is not hedged, and they're going to have to reach for puts buy puts. They buy puts. It's actually going to cause the market making firms to actually sell S&P futures into the sell-off. Take a look at this into the close. All of a sudden, okay, we're rallying until the point where it didn't feel like much, but the S&Ps were down 7 a second ago. Now they're down 18. This is what I'm talking about. It's fast. It's broken. It's disconnected. The S&Ps right now are just, proof is in the pudding. When was the last time also you saw the S&Ps down 20 handles? Volatility is down on the day. There's no action right now, Gabe. And that is, again, it's inherently dangerous. If you're looking for a strong directional bias, you cannot have one right now. We're in a volatility channel. Wake up. Stop trying to handicap every single move. As I said, I have a little bit of like upward bias only because this has been such a incredibly strong level. But overall, okay, I am still sitting with, people, listen, speak with positions, not with words. I'm still incredibly bearish in the positions. I've got, bearish positions here, bearish positions in an IRA, a couple of bearish positions elsewhere. These are duration bearish positions. All right, let's cut to the chase. Let's talk a little bit about, trading an inversion of the yield curve, or the possibility of an inversion for a yield curve. Let me actually discuss exactly what that is. So first and foremost, we're going to bring up the U.S. Department of Treasury website. Oh, it couldn't have been a more exciting site. What I am looking to do in this particular case is trade the 2s against the 10s. All right, so we're going to teach you a little real quick here what the big boys of trade tend to do, and that is a lot of banks actually do this. All right, let's look at the 2-year and let's look at the 10-year. All right, zoom in. Now, I know that this is early May, but I'm just showing the 2 versus the 10 here. And back in early May, the 2-year was sitting at 2.73, and the 10-year is sitting, okay, let's just round it to 3%. What I'm going to look for, once again, is an inversion of the yield curve. And an inversion of the yield curve means is that this 2-year actually will eclipse and come over the 10-year, or at least play catch up. In this particular case, if you look, it's 2.73 versus 3, right? So what is the difference between those? And the difference between those, you're like, 0.27. You're exactly right. All right, so we'll just round it to 0.27, or we'll even call it 0.30. Okay, we can actually trade for, all right, this gap being filled, or even that the 2-year comes above, all right, 2-year comes above, for instance, the 10-year. In this particular case, right, we're going to look at the 2-year, we're going to look at the 10-year, and we're actually going to place a trade. So how would you do this? You would have to be long the 2-year, okay, short the 10-year. Now, it used to be in the past, okay, the way, look at these S&Ps. They're getting rocked into the close. It used to be in the past that you had to trade like bond or bond futures. And then, of course, the CME came out with a product. But I got to tell you, for the very first time today, I started trading, okay, 2 versus 10. And I started doing it inside of the small exchange over on Tastyworks. So we do a lot with the small exchange. I mean, the small exchange is still really, really new, relatively new exchange. The volume is finally starting to pick up a little bit. And what we do at TheoTrade is, if you're a member of TheoTrade, we give you a membership to the small exchange. A membership to the small exchange actually cuts the fees in the small exchange in half. If you're listening to this and you are a member of TheoTrade, okay, just email us and we can actually give you a membership to the small exchange. It's a $100 value. We went out and bought thousands of them. So early on, we actually bought thousands of them, a huge bulk discount. We paid an enormous amount for those, and we're still, handing them out to the members over here because we want to use small products. What's really, really cool about small exchange is they came out with a product where you can literally trade, like you'll see it over here. It says /S, okay, 2Y. That's /S 2Y. That's the 2-year. What's it trading for? And it says 26.73. What that amounts to is 2.673. So you're actually trading the rate. Like if you think this rate's going to go up, right? You buy it, right? So we're going to buy the 2-year. Then we turn around and sell the 10-year. Where's the 10-year? It's the /S, okay, 10Y. Now, right now, hey, listen, the place to actually trade this particular product's over at Tastyworks. Tastyworks actually originally built the small exchange. The small exchange is no longer owned by Tastyworks. Tastyworks was bought by a company called IG. They turned around and actually sold small exchange to a company called Crypto.com, which is absolutely massive in size. Anyway, you don't want to actually sell that 10-year. You can come in here and you'll see it says 29.3 0.939, which amounts to 2.939%. In any regard, you can actually trade this all as one, okay? And you can actually come over, right, to the trade tab and pull up what's called pairs trading. Now I have the symbols already in here. We're buying the 2 and selling the 10, okay? You can actually back down price a little bit. It's again, this is really nice functionality in effect to be able to do this. Cost of trade, a pairs order, okay? Then filled. That's it. That's literally, I just traded again into the trade. I had 2 contracts on. Now I have 3 contracts. What did I just do? I'm long the 2. I'm short the 10. We're going to look once again for an inversion. Again, an inversion in the yield curve. And I got to tell you, this marketplace, this thing just cannot shut down fast enough. 46 seconds left. S&P is actually selling off. You know, I love to explain stuff like I just did instead of having to worry about like bonds, and bonds are inversely proportional, of course, to the interest rate associated with them. And you can trade the 30 and you can trade the 10. Like nothing is cleaner than just looking at the 2 versus the 10 and literally trading, you know, the interest rate itself. It just makes so much more sense in a marketplace. So I've got 3 contracts on. We could just, you know, track this, you know, the trade price I put it on for, what we're making, what we're losing, every detail. Again, you know, this is kind of the innovation that's inevitable in this marketplace. S&P's down some 33 handles. I didn't see that one coming into the cash close. Here's the closing bell. Thanks everybody for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.